Alan.
Mick.
Okay, good to talk to you. So look, a lot of interesting things happening in the aircraft leasing space. One of the things we've got from clients over the last couple of months is a lot of different sort of investors coming in, different strategies, different things they're looking for. Maybe do you want to talk about that and the capital flows we're seeing?
Yeah, sure. Thanks, Mick. I guess it's the diverse range of investors we're speaking to now. That's the big change for us. It's the traditional private equity, you've got the infrastructure funds, you've got the institutional investors, and you've got those who play in the capital market. So it's the full spectrum, all with their individual return requirements and areas of focus. But then the purpose of what they're investing into and why, you kind of see it in a couple of different buckets. You've got the new entrants, so you're looking to identify new, highly experienced management teams with new capital. You've got the recycling of capital on some of the existing platforms, either for growth or fleet acquisition. And then you've got the traditional kind of consolidation agenda that's been playing for the last 2-3 years. That's going to continue as well.
Okay. And one of the themes that's come out of some of our conversation is interest in the regional space. So what is it about that kind of subset of the market that's interesting people?
Yeah, I think that kind of links back to the question about the return requirements. The regional space offers certain investors a slightly higher or more attractive adjusted rate of return opportunity. Why is that? The regional space is made up of lessees who probably have more diverse credit quality altogether. The sector has not been as impacted by the supply chain and OEM challenges, therefore there's decent supply of aircraft to enable growth and scaling at those platforms. However, investors are very mindful it's a niche sector, therefore when they examine a platform, they want to get confident that the management team have the industry knowledge and the capabilities to properly manage those risks.
Okay, so the theme there is potentially some sort of market inefficiency that could be kind of taken advantage of or invested in, but needs to be done with a little bit of care.
Exactly.
Okay, so maybe moving on from the private space into the public space, what are you seeing there?
In the public space, if you go back pre-COVID, you would see the large investment-grade lessors were regularly tapping or accessing the capital markets, drawing down large pools of capital that they've used over the last number of years to scale their platforms. There's a very strong funding market at the moment. You've got traditional aviation banks, you've got the credit funds, and you've got a number of alternative providers. So you have a broad spectrum of debt providers to provide capital to those who are not investment grade, whether it be term loan or wholesale. Okay, we haven't seen the full re-emergence of ABS. The initial signals are there. There's a few deals done in the last few weeks, which is really encouraging. But the real message we have is there's a large pipeline of ABS portfolios and activity to be done once there's confidence that the market conditions are right.
Okay, so like a lot of interesting things from that, and what we're seeing is an asset class that's maturing, an asset class that's kind of part of now the standard investment portfolio for a lot of those big clients.
Yeah, absolutely. I think the industry now is maturing and has a really strong track record. It's demonstrated its resilience through COVID, and from conversations with the investment community, it's clearly on the capital allocation agenda for a broad spectrum of investors.
That's great. Okay, well, interesting couple of months ahead, and thanks for your thoughts on that.
Thanks, Mick.